Welcome back, and joining me for a look at the equity scene is independent analyst Nkosilathi Dube. Nkosilathi, thanks so much for joining us this evening. Let's start off with general markets action. We've seen global and local stocks kicking off September in the red. What's fueling the negative sentiment here? Are we just seeing jitters rather ahead of that US labor print, or are markets also just digesting those downbeat factory activity prints out from the Eurozone, out from China? Take us through what's, fueling that negative sentiment.
Well, thank you very much for having me. And yeah, that's a great question. We started to see markets move into the red to start off the month. But I do think that it's partly due to investors being a little bit more cautious, especially ahead of the key economic data coming out of the US this week. If you do recall, the last time we had an NFP reading, it did cause quite a lot of volatility in the markets, and market participants sold off quite significantly. So it could be a case that participants are now playing it a bit safe, just to exit some of their positions ahead of the data, just to also try play it safe with the volatility that's likely to come from the data coming up.
I remember that August was such a while ago, but it seems like that, that market sell-off happened so long ago, but it just happened like a few weeks ago. Let's move over to some local company news, or rather some local news, starting off with GDP numbers. Growth coming in higher than expectations, up 0.4%, also coinciding to the time where we did not have load shedding. What did you make of that print?
Yes, so we did see quarter-on-quarter GDP increase by about 0.4%, slightly higher than expected, which is a good sign that the economic and business conditions did improve in the second quarter compared to the first quarter. However, there are still some concerns, because if you look at it from a year-on-year perspective, the GDP did slow down slightly compared to the prior period. And if we look at, certain sectors in the economy, such as the manufacturing sector, there was a bit of a slump in the manufacturing activity. I think the manufacturing PMI reported just yesterday came in at contractionary levels. So, it could just be a sign of a sluggish global and domestic demand, considering that China also, which is one of South Africa's biggest export destinations, has been facing some slower economic growth than expected. This could be in part to play, for the slightly subdued year-over-year GDP growth. But on top of that, there is highly elevated borrowing costs, which could have potentially hindered investments in the economy overall. And these factors do play a part in slowing down the GDP, on a year-on-year basis.
But good news nonetheless, I guess, considering that we moved from negative growth to positive growth in the second quarter. Something that is a bit more positive, Shoprite's numbers. They were out with annual numbers today, recording growth in revenue as well as their bottom line. But it doesn't seem like markets were pleased by those numbers. Last time I checked, that share price is down close to 6% today. Was Shoprite just caught in the overall negative sentiment that we're seeing?
Yes, I do think it was just caught in the overall negative sentiment and, the risk off sentiment. The share price was down about 6%, which doesn't reflect the results that it reported. Looking on the brighter side, though, it did report double-digit growth in its core business. The group sales were up about 12%, with growth registered across its key brands, including Checkers and Usave. We also saw operating profit grow about 6%, which leaked down to the bottom line with a 7.2% growth in its EPS. So the results were fairly decent, but I think that it would take a bit of a risk appetite within the market to see that share price rebound from what has happened today.
More news out of Shoprite. They've said they'll be selling their furniture business to Pepkor. I guess a good move for Pepkor, considering that their home division with the Pep Home stores kind of gaining market share in that space, right?
Yeah, Definitely, there was actually quite a lot of business happening today behind closed doors, but it's a good sign for Pepcore. It would mean that they would be adding about 400 stores to their furniture business overall, which would unlock, new value and a larger portion of the market for its furniture business. It also opens up new channels for efficiencies in the supply chain. So it could be a good deal for Pepcore. And at the end of the day, it's valued at about 3 billion. So that's cash inflows for Shoprite overall. So that's a good thing for Shoprite too.
Now back to some results. Diversification seems to be working for Motors. It's South African unit not posting much growth, but Australia and the UK posting growth on that end. However, this didn't filter through to the bottom line. Walk us through some of the pressure points for Motors.
Yes, so its share price was down 6% at the close, roughly. Its results were fairly mixed. Revenue was up 7%, as you did mention. Its overseas business was doing fairly well compared to locally. The major shock was the bottom line. Its earnings per share was down about 28%. And one of the main culprits for this was the higher financing costs due to the high interest rates, which dragged down the profitability. But if you look at its overall business, the underlying business was somewhat subdued, and this essentially does reflect, some of the pressures that the consumers are facing at the moment. It did cite, higher than normal vehicle and parts inflation. So this combination of steep inflation and high interest rates has played a huge role in, weakening the consumer spending power. And as a result, this also shows in its financials. And also looking at the new vehicle sales stats released recently, we saw that vehicle sales did decline by 4.9%, which does reflect the overall strain that the consumers are feeling at the moment.
And I was about to mention that vehicle sales print that was out yesterday, just showing just how much pressure consumers are under at the moment. So hopefully, we are starting to see inflation ease. Hopefully that will then be reflected at the SOB's next meeting later this month. And we are just crossing fingers and toes that the SOB does cut rates come September the 19th. Nkosilathi, before I let you go, what's your stock pick?
Okay, so my stock pick for today would be Advitech. Its share price is up about 30%, and there's a strong likelihood that it could end the year with the fourth consecutive year of gains or value growth, which is a good sign. The underlying business is healthy. It recently reported its half-year results, where revenue increased by about 9% to just over 4.2 billion. We also did see its headline earnings per share up about 16%, and this was primarily driven by growth in its enrollments and also fee increases, which essentially cushioned the top line. We're starting to see more and more people considering private education for their children as an alternative to public sector education. And Advitech does stand out, at the forefront of this sector, with some of its institutions such as Varsity College and Crawford International, among others, being such key brands that are driving its business growth. So, yeah, that's one stock to look out for. I do think it could close the year on a positive note, but, we'll be yet to see what the results show for the full year.
Very interesting to see what South African consumers are willing to actually spend their money on, because when you do look at all three education counters that were out with results, Stadio, Curro and Advitech, all posting growth in student enrollment numbers. Nkosilathi, thanks so much for joining us today and just taking us through the day's markets action. That was independent analyst Nkosilathi Dube.